Good morning from Chicago traders. It is 8:14 Chicago time. I'm 14 minutes late today. Apologize about the delay, some technical issues this morning, as well as me coming in late. It just took too damn long to get to the gym and too long at the gym this morning. So here we are, just kind of a mess. Um, anyway, this is episode number 2114. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have the U.S. Veterans Day holiday. This means that the banks and the Treasury market is closed. There are no economic events scheduled today in the U.S. There were several out of Europe. Great Britain released its balance of trade, came in a little bit better than the forecast at a deficit of 2.8 billion. The Great Britain also released its GDP rate year on year, 6.6% versus 6.8, and the growth rate Q on Q prelim 1.5%. The prior was 5.5. The consensus was 1.5, came in at 1.3. The main thing that's remaining is, the main thing that's remaining is ECB Schnabel speaking at 11. Is it Eastern? Not sure. This calendar is actually not operating properly. Anyway, so let's just quickly move on through this stuff. The market condition is mixed to slightly risk on. Just the market's consolidating near overnight highs against the 4660 in the S&P. The 4660 had major trading going on yesterday and is forming a high volume node and is the point of control today. So it's that area. This area here is tending to have some noise. We're seeing the metals continuing to push higher, and overall, the news yesterday on the sell-off that was percolating through the market was that Evergrande is Evergrande's default on its payment. Evergrande, remember, is the largest real estate company in China with about 300 billion in debt. It defaulted on its payment, and that was there's a bit of a controlled implosion going on in the real estate market in China. So that caused markets to push lower, but we expected coming in, remember the scenario that played out yesterday was created during the Trader Bite pre-market, pre-news. We expected the market to not respond well to the inflation numbers that came yesterday, and we expected them down at 46.33, and that's what we got. We'll go over that in a minute. The S&P is currently in a multi-distribution, 177,000 contracts traded, higher than the mode, and 97% of the volume has traded above settle. So the inventory is long, 97%. Range is pretty decent at 23.5 points. Again, the point of control at 46.59. Nothing really key as far as earnings. Earnings are kind of falling by the wayside now as the major companies have already reported. Just a quick look at yesterday. I'm not going to spend much time on this. In the review, in yesterday's Trader Bite, the primary scenario drawn out that I drew was a pushback to 75, failure to hold, and then for it to roll over. And I talked about a test of 54.75 being really important. 54.75 down here, a test of 54.75. If it breaks through, then we're looking at 33 down in this zone right here. 33 would become the big target. And just like the day before, if we had broken through 75, I'm looking for a pullback to sell around 46.80, got to 46.79, I think. And the idea is we would push into 60 and we would push to 54.75. We could not get the 60 or the 54.75 really. In the prior session, we got to 63 and a quarter. We didn't get to 54.75. It took yesterday's session to get us down there, and then 50 being the area where we balanced out. And beneath 50, I showed yesterday there was a huge gap in the stock zones, and I talked about excuse me, the area between 50 and 33 having very weak structure. So once it gets into that area, you don't want to get long, is what I talked about. You don't want to get long, and the idea is to steadfast hold the short into 33, and we got that right here. Pretty much played right to plan. This is a very, I hate to say this because people have probably lost money in some of this, but this is a very structured, competent, normal auction that we've seen over the last couple of days, which we have not seen over the last 2 weeks. And so the action was, let's just say, cleansing in nature. The big concern yesterday is that once it gets into 33, the next level down was 20, I believe. Yeah, it was 20. The big concern here, and that occurred right here in this what looks like an inverted head and shoulder with a neckline. The big concern is very often in the past, it's really hang on to these longer than the intended target because they tend to bounce hard. And yesterday we did get a bounce. We got a bounce of 22 points from the low, ended up settling at 46.42. We have a lot of volume at 50. We have a lot of volume at 60 yesterday. So you can see there's that finger that sticks out of the 50 and this high volume node that sticks out of the 60. We're currently at 60 and just going sideways. So coming into today, being as it is the Veterans Day holiday and no effect from the treasuries today, the action might be muted. We have an extended range profile for yesterday. We went from 46.78, 75 down to 46.25 for a grand total of 53.5 points. That is wider than the daily statistical range expectation. And so today I'm expecting to be an inside day, retracing some of the action that has occurred. And if you look at this profile, you can see that there's a nice neckline right there, a nice neckline right here, and there's this depressed range right in here. So in between the 46.71 down into 46.48, which is where we are currently, this area is relatively poorly auctioned. We don't have really a battle going on in that zone, and we are likely to get stuck in here coming into today. It's 8:22, so I need to move on. Looking at what the overnight session has done, it has basically followed the typical recent pattern of just calming back, floating back up. So again, here's the key zone, the 71. Pay attention, 71 to 48. Okay, that's kind of the zone I'm expecting us to play in today. Point of control at 59, 60, 60 being a high volume node from yesterday. So this is likely to be a noisy open given the configuration that we have. We have a double distribution profile. We can see there's a clear neckline at where? Where's the neckline? 54.75, 54.75, which was the key level yesterday. Remember, if it gets below 54.75, it is likely to pull back, break through, and that's likely to become resistance for continuation to 33. That was the key trade yesterday, which worked out perfectly. They don't all work out that perfectly. They don't often work out that perfectly, but they do. Those are big days, or should be big days, as you understand the context, the narrative, why those levels are important, and to trade those accordingly and not let noise come in. So, being as we are right here, I'm expecting a fair amount of noise coming into the session. We have a 97% long inventory, so I'm expecting a bit of a correction down into 54, potentially 50. I expect support at 50 this morning. We do have the full session VWAP at 52. We have the full session mid at 50. So I'm looking for this area, the 50 area, to provide support if there's any pullback, and this is likely to walk itself back up into the new point of control of 46.7275, 46.7275. Call it 46.73. What's a tick among friends? So that's how things look like. What are we expecting for today? Actually, I'm just going to spend a moment on this because it's really important to not lose sight of what the market has accomplished. Here's the VWAP catching up with price, and then price falling into VWAP, right? So VWAP has moved up a bit, price has moved down, and so what we have is another piece, another data point to the fact that we may be in chop here for a bit. We're seeing equilibrium. You can see the VWAPs flattening out, and you can see a lot of bars overlapping. This is a 4-hour chart. So before, we had this nice little trend line in the ES right down there, and now we're one time framing down, and we're getting a lot of chop. So this is where smart traders temper expectations and slow down a little bit. So this is the day to start tempering your expectations and slowing down a little bit, especially since it's a holiday. The Dow is relatively weak. The Dow has been a lot weaker than the other indices, and so has the NASDAQ. Which I'm looking at more actively these days. The Russell, again, these are signs that the market has exhausted its buyers and is going to have to. It's likely to have to show lower prices, push lower prices, and we're talking about sub 4,600 here. Show lower prices for fresh money to step in and invest again, especially with the drag caused by inflation. You can see the metals responding. Interestingly, the bonds and the notes, the bonds are holding up pretty good. The notes really not responding very favorably. Anyway, moving on to what's expected for today so we can wrap up here in the next 2 minutes. That'll leave us with a minute to get going. Master levels, stock zones, and what are we expecting for today? Really annoying when I have technical issues because it just puts a lot of frenzy to everything. So here we are. What is this color? Here we are against this overnight point of control, against the 60, and we are opening right against it. So I'm looking for an open auction. I'm looking for it to respond down into the 50 zone, 52, 50. Consolidation, and I'm looking for the overnight stat to be to the upside, and I'm looking for this thing to get back up towards 71.72 this morning. That's 20 points, much lower than the expectation, but I'm looking for it to push to 72, consolidate up here before recovering the MC point of control at 73, and then just sits sideways into Friday. That's the primary scenario. The consolidation may be extended today, given that it's a holiday and we're opening in a relatively contested area. The secondaries we do push immediately into, and we lift up into the 66, 67 area right here, 67. Have a hard time, consolidate, come back to the point of control, and we're looking at chop around the 50 and filling in this 41 to 67 area. Another 20-point range, just a choppy day into the close. Nothing special about tomorrow, just another Friday. So just I would say temper your expectations, at least give yourself time to let the market prove to you that it is impulsive, that the rotations are wide, and that you should engage. Good luck, and sorry about the delays, and good luck with your trading today. Take care.